Hello and welcome to this new episode. We all know that Q2 FY25 result has already started coming in. Uh, as I keep on doing every quarter, this quarter also I will try to cover up as much as possible. So I speak a lot related to IT industries, right? How IT industry is shaping up. I can remember like from the very beginning of making the videos, I have started posting on the views and outlook of the IT sector. This quarter also I will do the same. In this video, in today's video, what I will do, I will speak a few words on Infosys. And why Infosys? Because Infosys gives a very clear-cut roadmap. So let's begin with Infosys. तो इन्फोसिस बोलने के लिए वेरी इंपॉर्टेंट इज we will start with the constant currency growth of Infosys and the management guidance. So top line of Infosys grew 5% year-on-year basis, but that is not that important. Important is the constant currency growth rate. If we see, then constant currency growth rate of Infosys on year-on-year basis stood at 3.3%, when constant currency growth QOQ basis is 3.1%. So very important that in between couple of quarters, December quarter and March quarter was the were the weakest quarter in terms of constant currency growth. June quarter has shown some revival and now it is maintaining in September quarter. If we see the management guidance, then it will give us the clear-cut picture of the market, how management is looking at the market ahead. We all know that Infosys gives exit year exit guidance, means now for FY25, obviously FY25 exit guidance. In Q1 FY25, let's say after Q4, what the management said, after Q4 FY24, management said 1 to 3% growth for FY25, 1 to 3% top line constant currency growth for FY25, exit FY25. In Q1 FY25, things were somewhat in favor, and management said, guided rather, 3 to 4% top line growth, constant currency basis. So initially said 1 to 3%, then said 3 to 4%. After Q2 FY25, management guided 3.75 to 4.5%. So another almost 50 basis point correction, upside correction in the growth guidance, top line growth guidance. That is obviously positive. So 3 to 4% to 3.75 to 4.5%. Somewhere things are coming in favor. Things are improving because since April 23, we have been witnessing single-digit growth for Infosys. Single-digit constant currency growth guidance for Infosys. Not growth, that is growth guidance I'm talking about. Now, it has started, like we have seen, I have the data in front of me. So in Q1 FY24, infy management said 1 to 3.5% growth. Q2 they said 1 to Q2 FY24 they said 1 to 2.5% growth. Q3 FY24 they said 1.5% to 2% top line growth. Actual FY24 exit was 1.4% only. So somewhere it was hovering between 1 to 2%, and now it has started improving. Now for the first time in Q1, management posted 3 to 4% growth. There, that was after a long time. Like last April, last to last April, that was post Q4 FY23 in April 23 actually, management gave 4 to 7% top line growth guidance, that is constant currency basis, for FY24. So actual was 1.4%. Try to understand. After that, this is the first time in Q1 FY24, Q1 FY25, they are citing 3 to 4% growth. And why 4 to 7% growth? And we are optimistic more on 3 to 4% growth than 4 to 7%, because 4 to 7% when the management said in April 23, then earlier quarter we have seen some double digit growth. In actual growth in FY23 was 15.4%. Try to understand, 15.4%, and after that management straightway is giving guidance 4 to 7%. So it was on the downward slope. It was just on the downward slope. Now it is in Q1 FY25, it seems it is bottoming out. Things are improving. Now, if we check a little bit on the performance of the sector, very important, because overall sectoral performance gives you the consolidated number for Infy, for all IT companies rather. Financial services domain, very important. Financial services domain, which has been weak for last many quarters. I can see from March 23, it's quite weak. From June 23, BFSI sector has started posting negative top line growth, that is top line degrowth on constant currency basis. So it continued for 4 consecutive quarters. Afterwards, in June 24, last quarter, in Q1 FY25, somewhere I can remember in my previous video, you can check, I said after these 4 consecutive quarters of degrowth, there is a positive, there is a although it was not handsome, but yes, they managed to give some positive constant currency growth. So it is a green shoot. I said this thing. Now see, now the September 24 number is top line growth for BFSI sector is 2.3%. What didn't do well, that is the retail sector. Retail sector contribution is around 13%, but retail sector posted 9.6% degrowth. Why? I will discuss it. Communication, after a prolonged weakness in this quarter, it has done well. 7% constant currency growth for communication. Energy, 10.9% constant currency growth, very handsome, and first double digit growth since June 23. For after 5 quarters, in the 6th quarter, we are able to see 11% growth, constant currency growth for the energy, utilities, and resources segment. So that is a very good sign. Manufacturing has been continuously doing well, quite robust. This time, last couple of quarters, there was single digit growth, but growth was on the higher side of the single digit. Now this time again double digit growth, low double digit, that's 12.3%. High tech, it was also weak. Last quarter it posted 2.1%. This quarter it is 6%. So high tech is, I will say, more volatile. Life sciences, after a prolonged time, it has posted negative 3.5% degrowth constant currency basis. So altogether 3.3% constant currency growth in September quarter for year-on-year basis, obviously, for Infy. Now, green shoot is in the financial services domain, and why I have been continuously emphasizing, because this is the largest segment for Infy. Its contribution is, in September quarter, its contribution was 27%, 27.2%. That is why it is very important. North America, we know the larger part of the business of the company comes from North America. So 57.4% is the contribution of North America, followed by Europe at close to 30%, 29.8%. Now, North America, we know the entire slowdown was in North America. Europe was also following America, but US was the biggest dragger initially. So the problem was, we all know that there was crunch in discretionary spending. Lots of deals got not cancelled but postponed. We have witnessed large deals, but deals were postponed. So that impacted top line, and we know that BFSI sector is closely related to the Fed's interest rate policy. So interest rate was consistently going up. So obviously it was not a favorable scenario for the BFSI sector. And now Fed has guided for rate cut. So couple of rate cuts indicated by Fed last time, and in this financial year. So these are all positive. Only one small disruption, that is the US election in November. So that is a small disruption. It's not a very long lasting anything. But despite that, till September end, things were in favor. So how was it in favor? Let me discuss. Strong performance in sectors like BFSI supported by US banks. Financial services segment in the US witnessed discretionary spend, broad-based momentum, especially in financial services, and smaller deals are quite in number. That is, which are under 50 million. There was absent of large deals, but small deals were many. So small deals are basically making up absence of large deals. So this is a positive sign, and very interesting that discretionary spend is back, which I have spoken in my last video last quarter, that discretionary spend was absent till last quarter, but now discretionary spend has come back. Vendor consolidation in the automotive sector in Europe due to economic slowdown and pressure on profit margin. Strong growth in energy and manufacturing sector with cloud adoption and AI integration. We have discussed that energy utilities have posted almost 11% constant currency growth. Manufacturing vertical showed robust growth supported by acquisition and vendor consolidation efforts, and manufacturing is robust for last quite a few quarters. Retail sector performance focus on cost takeout deals. I said even in the bad time, the hope was cost takeout deals. There are two types of, one is discretionary that can be postponed at the bad times. But cost takeout deals have made over. Even in the bad time, we have seen retail sector is engaging these IT companies for cost takeout deals, because reducing cost management becomes very important at the bad time, and that's why aggressively these companies were managing cost and getting engaged with the cost takeout deals. So that is there in the retail sector. I think that indicates continued slowdown in the retail sector, but BFSI, the largest contributor, that is likely to do good. There is a green shoot in this quarter. In the last quarter I did mention, and this quarter also it is continued. So I hope going forward we will see small but gradual improvement. Q3 may be an outlier due to the US election, but from Q4 onwards, I believe things will start falling in line. Right. And strong traction in energy services with companies adapting energy transition strategies. Large deal pipeline remains strong with a focus on cost efficiency and automation. Large deals pipeline is strong, but conversion was nil. There was no large deal in this quarter. Smaller deals are growing. Broad-based across verticals. If this trend continues, it could indicate stronger demand in 2025, what management is saying. So smaller deals, broad-based deals across the verticals, if it continues, it could indicate stronger demand in 2025. So things are gradually shaping up for entire IT industry, I would say, entire IT industry. No major new mega deals reported across the industry. I have discussed this, and this faster conversion of smaller deals has been continuing for quite some time. Changes in the smaller deal pipeline reflect discretionary spending programs. So altogether, these are the key pointers which I have taken out from the entire uh, call for this particular video. So please note, this is my disclaimer that I have no buy, sell, hold recommendation on the stock mentioned. I have discussed infy specifically in this particular video. So I do not have any recommendation on infy or the IT index. What I am saying, things are gradually shaping up. Need to keep a close watch. Need to choose the correct stock based on various factors, based on valuation, and you have to judge other sectors parallel. There may be other sectors who have better potential. So don't take a call just because of infy management has cited some positive result. So positive outlook. So please don't consider it as a buy, sell, hold recommendation. So that is it in this particular video. I hope better uh, condition of IT industry going forward. In the next videos, I will be discussing on other sectors. So hope you have this video was informative for you, and please don't forget to subscribe my channel. Need your support. Thanks. Bye bye.